Welcome, everyone, and thank you so much for joining us today. Today's session is going to be a little different from our usual webinars with SimpleConsign. We're diving into the technical side of inventory management with a special focus on accounting and finance, thanks to our special friends and guests with Scrub. Since this is more of a technical discussion, we want to make sure you know upfront that not everything you'll hear today is directly applied to SimpleConsign software. It will be focused on the tools and techniques to help make your store more financially efficient with inventory management. But don't worry, if you're curious on how SimpleConsign can support your specific inventory needs, we'd love to chat, and you can set up time with our sales experts at www.simpleconsign.com/schedule. So thanks again for joining us today, and let's get started. Okay, so starting with our guest speakers with Scrubbed. Who is Scrubbed? Scrubbed is an outsourced professional services firm providing a complete suite of accounting, finance, tax, and professional services. We have the right mix of talent and technology to empower you with accurate and timely information. In this webinar, we are going to walk through the importance of inventory management, the benefits of effective inventory management, and key strategies and key takeaways. Our two speakers here today are Is Valios and Winzith Maglante. Taking a look at Is's background, she has over 14 years of extensive experience in accounting, expertise in general accounting and financial reporting. She is experienced university lecturer in accounting and auditing, a strong background in retail and merchandise sectors. She's currently the director at Scrubbed and overseeing the e-commerce and family office group. Next, we have Winzeth with over 10 years of experience in accounting and auditing, and her expertise is in auditing clients in retail and distribution, manufacturing, insurance, and holdings and services. And she's currently the accounting senior manager at Scrubbed and co-manages the e-commerce and family office group. So I will pass things over to our guest speakers today.
Thank you so much, Caroline. Thank you for that introduction. And thank you for having us. And hello, everyone who's joining us today. I'm seeing some people sending some messages on the chat box. So welcome. Thank you for joining us in today's webinar with our topic, inventory optimization. So like what Caroline said, Winzeth and I, our background is in accounting and finance. So we hope to share what we've seen with the clients that we've worked with in the e-commerce and retail industry. Some of the tips might not apply depending on the industry and the scale that you operate on, but we're hoping that all of these concepts could be helpful to everyone. So starting it off with the importance of inventory management, we know that the retail and e-commerce industry have become bigger, especially in the recent years. Everyone's, ordering online, buying stuff. It has become a lot easier and faster for all of us. And in this fast-paced world of retail and e-commerce, staying ahead of the competition requires more than just offering great products. So one key aspect that can make or break your success is, of course, our topic for today, efficient inventory management. And proper inventory management plays a crucial role in driving both efficiency and boosting profits, which we all want. Effective inventory management, unfortunately, is a complex task. I'd love to say that it's easy, but really, there's a lot to consider and think about. Whether you run a small boutique or a large retail chain, striking the right balance between supply and demand is always needed. And many businesses grapple with issues like overstocking, stock outs, inaccurate forecasting, and inefficient order fulfillment. These challenges impact customer satisfaction, and they can lead to unnecessary costs and sometimes missed revenue opportunities as well. So even if everything's online, everything, looks seamless, there's a lot of process management that's happening behind all of that. And that's what we hope we could share to you all today. So moving on, optimizing your inventory management can result in significant benefits for your retail business. a well-managed inventory can be a game changer. So the first advantage here is having an optimized inventory is improved operational efficiency. So what this means is you're able to fulfill your customer orders effectively. This includes improved order accuracy. So for example, when you place an order and receive the wrong item, I think this happens to a lot of us, or maybe an incorrect quantity, this definitely affects, customer satisfaction. And accurate inventory tracking also minimizes the risk of theft, damage, of losses, and even of obsolescence. Next is increased profitability. So this is mainly about reducing our costs. This includes both carrying costs, or the cost to carry or store your products, and ordering costs. So if you order more often than needed, you're incurring more delivery or ordering costs. Effective inventory management also ensures minimization of stock outs. Stock outs mean lost revenue, which of course has a direct line to your profitability. And stock outs also lead to unhappy customers, which brings us also to the third advantage, which is enhanced customer satisfaction. So if you have minimal back orders, it means you have good order fulfillment, it lessens customer frustration, and increases loyalty. Also, improving order accuracy, this is related to what I also mentioned a while ago. So even if you're able to have stocks available, but if you're shipping the wrong items, that's not going to be good for the customers. The last one is greater business agility. So having an effective inventory management enables businesses to respond quickly to market changes. So if you have the information readily available for you, you can make the necessary decisions right away before it's too late. So it leads to better decision making, and it supports informed business decision. We can expound more on this later on, the strategies. So today we have 8 strategies that we want to share with you. We'll go over them one by one. And we'll try to share a few quick stories from what we've seen among our clients. We'll tell you what works, what doesn't work, and how each of these practices can help you better manage your inventory and ultimately your business. So let's jump right to the first one, which is leveraging technology for real-time inventory tracking. There are still a lot of businesses out there that are using manual spreadsheets or sometimes even paper to track their transactions and their inventory. I cannot emphasize enough how much you're missing out if you don't venture into automation. Investing in advanced inventory management software can revolutionize your approach to inventory control. These tools offer real-time insights and sophisticated analytics. They automate order processes and provide accurate inventory tracking. Using these technologies, you can do things faster, make fewer mistakes, and keep your stock levels just right. So, story time. We have a client who was tracking inventory manually. And since they weren't using a robust inventory system, every time they conduct a physical count, it always results in a big write-off of inventory. So their books are showing that they have a lot of stocks. But when they do the physical count, they find out they don't have as much as what they thought they had. So in accounting, we'd have to then recognize a big loss, and it shows as an additional cost in the P&L. Also, they were experiencing frequent stock outs, and they couldn't fulfill their customer orders because of this. So it's important to have an automated system that tracks your inventory so that you know the real level of your stocks and you're able to fulfill your orders effectively. All right, so moving on to the second strategy, which is segmenting inventory. So, okay, well, not all products are created equal. It's important to keep that in mind when you're managing your inventory. By putting your products into different groups based on, say, how much people want them or how much money they make or how fast they sell, you can make your product offerings a lot better. So In finance, we call this demand analysis, profitability analysis, and calculating turnover rates. So by focusing on high demand items and making sure that you have the right mix of products, you can enhance your sales, avoid having excess inventory, and increase overall profitability. So we worked with another client to figure out which of their products were the most popular, which ones people bought on their own, and which ones were often bought together. So they used this information to create bundles that their customers loved. And they stopped selling the products that weren't making them any money, the ones that were too expensive to make or to store, and the ones that weren't selling much. And it's a great example of how understanding your inventory information can help you make smarter decisions about your products. So that's the second strategy. The next one will be discussed by Winsett.
Thank you, Eve. Hi, everyone. I'm Winzeth, and I'll be discussing the next two strategies. So, our third strategy is building efficient supplier relationships. So, this isn't just about getting good deals from your suppliers. It's about making your inventory management a whole lot smoother. So, if you can imagine this, you've got a supplier who knows your business inside and out, delivers on time, and gives you the best prices. It's like having a secret weapon in your inventory game. But how do you do it? So, first, communication is key. Don't just place orders and disappear. You should talk to your suppliers regularly, share your forecasts, and be open about any changes in your business. Second is you have to be fair and transparent. You should treat your suppliers like partners and not just vendors. Be honest about your expectations and, of course, pay your bills on time. And finally, you should be able to negotiate like a pro. Don't be afraid to ask for better terms, but also be prepared to offer something in return. So, what are the benefits of building a strong supplier relationship? Well, you can be able to reduce lead times and avoid stockouts. You'll be able to negotiate better prices and terms, improve your overall operational efficiency. So, all in all, you'll be able to build a stronger and more resilient supply chain. So, story time. Let me share you a story about one of our clients who faced a common inventory challenge, which is dealing with a supplier overseas. So, this particular client was ordering finished goods from China, and it was a real headache trying to manage everything from another country. So, communication was slow, negotiations were tough, and they were worried about quality control. So, what did they do? They decided to hire a local representative in China. This person was their eyes and ears on the ground, managing transactions with the supplier, ensuring smooth communication, and overseeing quality checks. And the results were impressive. So communication improved dramatically, negotiations became much easier, and they were able to maintain strict quality standards. So this just shows the power of having a trusted representative in place and having that strong and reliable relationship with your supplier. So the next time you're dealing with your supplier, remember that it's not just about the transactions. It's about building a partnership that can help your business thrive. Okay, next strategy is considering just-in-time or JIT inventory systems. So this is a strategy that's all about receiving goods when you need them. So imagine it like ordering groceries just when you need them instead of stocking up on a bunch of things that might go bad. So what are the benefits of JIT? First, you'll be able to reduce storage costs because less inventory means you need less space to store it, which means a smaller warehouse or reduced rent. Next is it will improve your cash flow because it can help you sell your inventory more quickly, which means faster cash flow. So it lessens the capital tied up in inventory, which can be used for other purposes like investing in a new equipment or, say, expanding your business. Next benefit of JIT is increased efficiency. So it can help you align production with demand, reducing the risk of producing too much or producing too little. So producing only what you need, you can minimize waste due to obsolescence or damage. And lastly, you can have better quality control because smaller batches make it easier to identify and address quality problems before they become major issues. But there is a catch for JIT. because JIT isn't for everyone. So it requires a lot of coordination with suppliers and precise demand forecasting. So if you're not confident in your ability to pull it off, it might not be the right choice for your business. So we've got here some criteria for you to some criteria for you to assess if JIT is the right choice for you. So first, this is effective for products that have high demand and rapid turnover. So think consumer electronics like smartphones and laptops, or fast fashion retail clothing and accessories. These products are often high in demand and have short life cycles, making JIT a good fit. Second is if your products or industry have a predictable demand. So examples of this are food and beverage, pharmaceutical products often have relatively predictable demand, making it easier to plan production and deliveries. So next is if a product has high inventory holding costs. So items like electronics or jewelry can be expensive to store, so minimizing inventory levels can significantly reduce costs. Next is if you have reliable suppliers. So this is where building efficient supplier relationships come in, which I discussed earlier. So companies that rely on a network of suppliers need to ensure that their suppliers are capable of meeting JIT requirements, which means delivering parts on time and in the right quantities. And lastly, if you have flexible production systems. So this is the ability to quickly adjust to changes in demand or product specification. So this just means having a production system that can be easily modified to produce different quantities or variations of a product. So just some of the well-known companies that implement JIT are Toyota, Dell, Harley Davidson, McDonald's, Apple, and Boeing. And as I mentioned a while ago, JIT is not for everyone. So before you consider implementing JIT, please carefully evaluate your business and its unique needs. So if you think it's a good fit, then start by building strong relationships with your suppliers and developing accurate demand forecasts.
All right. Next would be cost control and profitability analysis. So understanding the true cost of your product is super important for maximizing profitability. Conducting thorough cost analysis, considering factors such as procurement, storage, and fulfillment costs enables you to identify areas for cost optimization. By carefully looking at things like how much you pay for them, how much it costs to store them, and how much it costs to get them to your customers, you can find ways to save money. So we had a client who was really struggling with their finances. They also didn't have a good system for managing their inventory, and their accounting was a mess. They couldn't figure out why they were losing money and they don't know what's going wrong. So we helped them figure out the real cost of each product, and they discovered that some of them weren't making them any money. They also realized that storing some products was costing them a lot, and some warehouses were charging them way too much. So this helped them decide to switch to a different warehouse. So if you don't know how much each product costs you, you won't know if you're spending too much on them already. So that's cost control. The next one, demand forecasting. So one of the most important things in managing inventory is accurate demand forecasting, which means figuring out how much people will want to buy. By using advanced data analytics and looking at historical sales data, you can predict customer demand patterns. This helps you keep just the right amount of stuff on hand so you don't waste money on keeping too much inventory and you don't run out of stocks to sell. Demand forecasting may be a bit intimidating and it may require an expert to conduct it. In Scrub, aside from the accounting team, we also have a corporate finance team who helps us with these types of forecasts. So we have another client. They have a operations team, and their operations team kind of messed up a bit. They purchased excessive amounts of inventory. They placed large orders to their supplier, but they weren't able to forecast the demand. It turned out that the stocks weren't selling, so as a result, they were running low on cash. and they still had a lot of purchases to pay for, but they couldn't. Plus, their carrying costs or the cost to store their inventory was rising, which of course they also have to pay. Plus, their products were food items, which have expiration dates. So, although the products had longer shelf life, still that's another thing to think about. But eventually, they made it. They were able to survive, but they had to manage their cash really, really tightly. So, demand forecasting really is a must.
All right. So moving on to the next strategy, let's talk about something a bit more serious, just paying attention to compliance and risk management. So it might sound boring, but it's a crucial part of inventory optimization. So think about it. You've got a ton of inventory and it's all subject to regulations, from taxes to quality standards. There are a lot of things you need to follow. Now let's dive into why compliance is so important. So first, of course, we want to avoid fines and penalties. So if you don't follow the rules, you could get fined or penalized by the government, and this can hurt your bottom line. Second is, of course, you want to protect your brand because a bad reputation for not following the rules can damage your business and people might stop buying from you. And lastly, you want to ensure customer safety, especially in industries like food and medicine. It's important to follow the rules to keep your customers safe. And in addition to compliance, risk management is also crucial. So risk management will help you mitigate financial losses. So things like theft, damage, and products that are out of date can cost you money. Risk management can also improve operational efficiency. So by figuring out and fixing potential problems, you can make your business run more smoothly. So let's look at a couple of examples of industries that are particularly heavy on compliance and risk management. So one of this is the pharmaceutical industry. So companies in this industry have to deal with incredibly strict regulations. So their systems for managing inventory are designed to ensure that their products are manufactured, distributed, and stored according to the highest standards. And the second of this is the food and beverage industry. So companies in this industry have to comply with food safety regulations, manage expiration dates, and prevent foodborne illnesses. Their inventory management systems play a crucial role in achieving these goals. So the next time you're thinking about inventory optimization, don't forget about compliance and risk management. So it might not be the most exciting topic, but it's definitely an important one. And last but not the least of the strategies, it's to continuously monitor and analyze performance. So this is about the importance of keeping a close eye on your inventory. It's like watching a plant grow. You need to check on it regularly to make sure it's healthy and thriving. So how do you do it? You have to create regular performance reports. So make reports about how your inventory is doing. So this can be weekly, monthly, or quarterly, depending on what you need. Next is you have to analyze key metrics. You have to look at things like how fast your inventory sells, how often you run out of stock, and how accurate your orders are. So these numbers will tell you how well your inventory is doing. And lastly, make data-driven decisions. Use the information from your reports to make good decisions about your inventory strategy. So at Scrub, we're experts in this area. We help our clients create detailed reports that not only track financial performance, but also provide insights into inventory health. So here are some of the things we do in particularly revolving inventory. So first is the gross profit analysis. So we help you break down your profits into smaller pieces. So we analyze your profits by product or by SKU, location, or customer. So this helps you see which products, stores, or customers are making you the most money. Next is the cost of goods analysis, where we make sure that your revenue and cost match up correctly. So this is just like checking your math to make sure your numbers are right. Next is inventory valuation, where we ensure that it is valued correctly on your books. And this is important because it affects your financial statements. And lastly, we do inventory tracking, where we make sure your system shows the right inventory levels at the right time. So this helps you avoid running out of stock or having too much stock. So by staying on top of your inventory performance, you can be able to identify areas for improvement, improve profitability, enhance financial accuracy, and improve customer satisfaction. So, in summary, our inventory analysis services can help you get a complete picture of your inventory health and make informed decisions to improve your business's performance. All right, so let's recap what we've covered. So we've talked about the importance of effective inventory management and explored some key strategies to help you optimize your inventory levels. And here are some key highlights. So first, inventory optimization is essential. So remember that it's not just about having enough stock. It's about having the right stock at the right time. Next is to reduce excess inventory. So techniques like demand forecasting and just-in-time or JIT to avoid having too much stock. Next is optimize inventory costs. So consider things like storage costs, holding costs, and products becoming outdated when managing your inventory. And lastly, track and report effectively. So use technology and data to monitor your inventory performance and make smart decisions. So remember, inventory management is an ongoing process. And by following these tips and staying up to date, you can improve your inventory management and grow your business. So after knowing all of this information, what's next for you? So you should take some time to evaluate your current inventory practices and find areas where you can improve. So think about using inventory management tools or getting professional help. And that's it. Thank you for joining us today. I hope you found this webinar helpful. And if you have any questions, please don't hesitate to reach out. So you can connect with us through these email addresses showing on your screen, sales@simpleconsign.com and engage@scrub.net. And again, thank you for your time.